Afternoon, everybody. How are we all doing? Happy Tuesday. I never remember what day it is at the moment. All rolling into one. How is everybody? Afternoon, Monkey, Egosa, Crom, Baggy Fletch, Evil, FTNet, David. It's time, Amy, George, Daniel, Dina, Ismet, Ryan. How are you doing? So, market stuck, apart from the yen. That's dying. Afternoon, XR. Yeah, mad moves on this yen. This US dollar yen is not stopping. Not stopping. We're approaching 155. It's within half an ADR now. 34 pips, 35 pips away, half an ADR. We're half an ADR away from 155. The Japanese basically have been moaning constantly. Go away. I don't want your advert for your pen. Shut up. Sorry. Happy Intervention Day. It would be nice. Afternoon, Rodrigo. So yeah, the Japanese complained again this morning. Well, they're just talking, not doing anything. It's driving me nuts. Cabinet Secretary Hayashi declines to comment on Forex levels or currency intervention. Deems excessive Forex volatility undesirable. Closely watching currency fluctuations. Prepared to take all measures on foreign exchange. Bloody do something then. Stop talking about it every day. Fed up with it. And yet this just keeps pushing. So still no intervention. Still blabbing about it constantly. Nothing we can do. I took a loss on it yesterday. So I scaled out of 3 positions yesterday that I had, which was about 4%, 3.7% loss, something like that. I've held on to 3. About to take another one. And assuming that this 155 is going to be the line in the sand now. But they just don't seem to care. I don't understand why they're talking about it if they're not going to do it. They always have. But like I said in the Discord channel this morning, we can only go on history. Every time they've said this, they have, if the market has pushed, intervened. I haven't heard them say it this long and leave it this far, ever. So, you know, it's just one of those things we've got to sit through. But 155 is certainly my line in the sand. If it goes up above that level, I shall be out. I'm not letting it go. Probably 150, 175 today. That'll be it. So we'll see. But crazy. So that's the overnight news. Is Japan have started waffling and said load of stuff and done nothing. Other than that, we've had some Chinese move. News. There's no escalation in the Middle East. That's on hold at the moment. So we've got where's my Discord gone? We've got news coming through at the moment from the Middle East. They are having a war cabinet meeting today at some point to discuss exactly what they're going to do about it. So whether or not they announce anything, we don't know. But they are meeting today. So today's kind of like the deadline for the Middle East, for some news on that, hopefully. We had unemployment change this morning. Not a lot there, really. It was positive. So the claimant count change has gone down. Number of people claiming unemployment has gone down, which is good. Doesn't mean they're necessarily employed. Just means there's less of them claiming. So that's not a bad thing. But if you look at the pound today, not a lot of movement off of it, really. We've had an ADR hit. So you can see the ADRs on the screen. We've had pound odd and pound New Zealand, but that's because we've had a weak Australian and New Zealand dollar today. But the pound basically not really done anything off the news. So very little movement on anything much today, to be honest. It's been a bit of a dead day. So that's this morning's news. we're looking at now, it seems, roughly 2 rate drops on the pound by December. So we're looking at 3 rate drops on the ECB and 2 on the pound. That's what the forecasts are now. So we are going to be reducing rates starting possibly June, July, pound as well. So slightly bearish stance, euro, slightly bearish stance, pound, but no confirmation of anything. So that's really all the news we've had this morning, not a lot. So today we've got the CPI figures for the CAD, 5 minutes. Forecast is for it to rise. Year on year, basically, they are forecasting either to stay the same or to drop. So we're expecting year on year to be stable, but for the monthly figure to have risen, exactly the same as we've had with the US dollar, which puts the pressure on the Canadians not to reduce those interest rates. So we're sitting at 5. Inflation is sitting at 2.8, and it has come down. So it's doing much, much, much better than the US. And it is coming down at a fairly decent speed, not particularly fast. But if that does not hit the forecast today, and we get a 0.3 or lower, we'll see a big drop in that Canadian dollar today. So we'll see what happens, but I suspect it will probably go up. Whether it goes up to the 0.7 or not, we'll have to wait and see. But this is just, they're forecasting a bounce on the way down, basically. So if we don't get that bounce, we get flat, that will reduce interest rates faster, which will be negative CAD. If we do get a bigger bounce than expected, as we've had off the US, we get a massive rally off the CAD, which will also in turn rally the US probably as well. So big number today. That's coming out in just under 5 minutes. Later today, we've got Bailey speaking, and also Macklem and Powell. So 3 talking heads, very important, especially this one, because Powell has got the power to basically talk this US dollar rally down if he wants to. Bailey can confirm what we're going to be doing with the pound, and Macklem will obviously give a reaction to what's happened with today's CPI and the sort of future guidance as what they're going to do with interest rates. We're interested to see if they're going to fall in line with the US, or depending on what this comes out as today, whether they decide also to decouple from the US and go with the euro and the pound and go a little bit earlier. So quite important talking heads at 6 o'clock this evening. And then we've got the CPI for the New Zealand dollar overnight. And then obviously tomorrow morning we've got the pound. So this is basically the big 24 hours this week, starting right now. So we'll see what happens. Pound New Zealand weekly range has just been hit. So we've just hit that weekly range. We're only on Tuesday. So that's done the entire week's range already in 2 days, less than 2 days. And we're coming up to a monthly resistance. Yes, that's last month's high. So we're just coming to test last month's high. Good looking short opportunity potentially on the Pound New Zealand. So the Aussie basically is weak today, as you can see. And the New Zealand dollar is also weak today. We're on a drop on the New Zealand and a drop on the Aussie at the moment. Aussie New Zealand is stable, sideways. Have been for 5 days now. Not gone anywhere. One move, no move. It's just a pain in the arse. The whole market's a pain in the arse at the minute. What can you do? You have to sit through these hideous times. So we'll watch EuroCAD because the euro's fairly neutral today. So that'll give us an indication of what the Canadian dollar is doing. Got not long to go. Let's drop down to M5 so we can see what goes on. Got just over a minute. Afternoon, everybody else. Edward, intervention routing 155. Yeah, fingers crossed. Be nice if it didn't get there, to be honest. But anyway, 155 will do absolutely fine. Tom, afternoon. Mark, Virginia. 7XM 7-day competitions. XM 7-day competitions. I don't know what that is. The winner did 2,000% in 7 days. Extreme gambling. Yeah, don't know. 2,000% return in 7 days. Yes, that is gambling, obviously. Big spreads coming in. 30 seconds to go. Looks like the CAD is powering up off the back of, well, just powering up ahead of the news. 20 seconds to go. Afternoon, Dallas. God, that's a big old spread coming in on this. Might get a big move off of this. 5 seconds. Looks positive CAD at the moment. They've gone ahead of the... Oh, no, negative. Negative CAD. Big negative CAD. So we didn't get the 0.7. We've come out lower than that, I can tell you that. But where? We'll have a look in a sec. Big negative move. Here you go. Euro CAD ADR. So we got a 0.6. So that... I'm quite surprised that's a big negative reaction because that's not actually that much of a miss, is it? We're on a 0.3. We were forecasting a 0.7. We got a 0.6. So it's only 0.1 differential. So it's not really massive. Oh, that's why, look. So the annual CPI has dropped. Okay, so the annual figures are down as well, which is important because that is now... coming down faster than anticipated. We were on a 3.1 or a 3.2 trimmed. So this is coming down faster than anticipated. So that's good. So that gives the Canadians, again, opportunity to drop alongside the Europeans. So we are expected to go early. Euro is. Pound will probably go slightly earlier as well than the US, and now that has come down faster than anticipated, there's potential for the Canadians also to drop early. So what we hear from Macklem this evening could well be quite impactful. So we could get some news this evening from Macklem saying fantastic figures on inflation coming down faster than expected. We can definitely foresee rate drops this year. And that might help the CAD, the US dollar come down as well. So look at the hourlies. So US dollar rallying against the Canadian dollar. Yeah, because the Canadian dollar is negative. So no negative movement. There's a bit of negative movement on the US. So slight negative move on the US, but not dramatic. Mainly affecting the CAD. So that's negative CAD. So we'll see if that move holds. That might just be a knee-jerk reaction, and then obviously we'll wait and see what Macklem says later. Yeah. But yeah, that's certainly negative CAD. So that's good. So we are starting to get a little bit of potential for this market to start to turn finally. Right, so let me quickly cover the ADRs and the RSIs today. I went through all the pairs yesterday, so I'm not going to go through all the pairs again today. So if there's any pairs you want to look at specifically, let me know. Euro odd. Obviously, that's an ADR hit to the upside. We've had very, very weak. They're all Aussie and New Zealand's today. So it's literally the euro and the pound against the Aussie and the New Zealand is all we've got moving today. So ADR hit to the upside there on euro odd. So that's gone through the weekly resistance. So we had that double top. US dollar CAD monthly range is hit. We're only on the 16th. So that's a big move, obviously, because of the US dollar CPI numbers skewing everything. But so we had a double top there, which we've just flown through. So your next resistance is here, which is a very nice, strong resistance. It's 150 ADR. So good opportunity for a short to play to start on the euro odd. and then, or wait if you want to up to there. But if you want to get in and start getting into the trade, there's probably a good chance of a pullback on that leg back into these propulsion gaps. So good looking short opportunity there. I've got Euro US dollar long at the moment, so I don't really want to take that short. Pound CAD 125 ADR. We've got the Euro New Zealand, also ADR. Again, beautiful resistance coming up. We've got this weekly double top and the monthly high. So there's a very good short opportunity there if you want to go short Euro. And there's a good chance, obviously, Euro is going to start to come down now. So that's a really good looking short opportunity. Got that Euro US dollar long on, which is really annoying. But do I want to hedge the Euro? Guess there's not much danger in it, because if that US dollar yen comes down, that's going to pop anyway. So might take one of these, probably Euro New Zealand. I'm going to get ready to get in short on that. So I'm just putting a sell stop in place on Euro New Zealand. The EA on the VPS will take this over and drag it up and get me in short on Euro New Zealand. Pound odd, also extended ADR, and we got the 2-week high coming up, and then the monthly coming up over here as well. So it's good looking potential short, looking for a pullback on that leg there, potentially the whole thing, but more from that leg there. So looking for that kind of move. So you can drop down, wait for a reversal alert on that today. Wants to load. We've already had one actually at ADR as well. So this is a retest. So you've had the reversal alert. This is the retest. So good looking short on pound odd, and pound New Zealand is exactly the same. So that's a hit to the upside. Just invalidated the highs there. So next reversal alert is going to be there, but you would have had one there. So pretty much the same as the pound odd, but it's just put a new high. So that would be a stop hunt high instead of a lower high, which is basically pound odd or pound New Zealand. And same play on that one, looking for a pullback. That's the nearest propulsion gap. You've got a little one there, but that's the big one. And it's a beautiful resistance. We've sold from 3 times. First retest of that. So that looks good. Actually, second retest of that. That's the first one. Whoops. Which we rejected. We just pushed through it. So potentially your M pattern is going to go in like that. Back down. So those two are ADRs. Obviously, we've just had the Euro CAD hit. I wouldn't try and mean revert this today. Obviously look at what's happened with this US dollar with the inflation figures. So this is the US dollar inflation not going where we wanted it to. So this is the CAD. It's obviously inverse because obviously the Canadian dollars had a negative, whereas the US had a positive. So all these Canadians, obviously, there is a possibility for just an accumulation, put in a massive propulsion gap and carry on a rally on this. But we'll wait till later and see what Macklem says about the forward guidance. So it may be a case of if they come out and say, yeah, it's come down, that's great, it's going in the right direction, but it's nowhere near fast enough yet. We're not quite where we want to be to put the interest rates down. That move will just completely revert. So you'll get an A-shaped recovery or a V-shaped recovery, depending which way you're looking at it. Yeah. So we'll see what happens with the news later, but there is a possibility for a mean reversion on that. Pound yen weekly range has just hit. This yen's getting run over today. Again. So pound yen weekly range hit. That's just triggered. So that's your weekly range done. Coming up into resistance on that one. Inverse head and shoulders pattern. So if we break that, I mean, the neckline's a bit uneven on this one, but obviously we know if that goes up, that means US dollar yen will go up. If that goes up above 155, we're all expecting it, but is it coming? We'll have to wait and see. So Euro CAD's hit, pound CAD hit. So same thing basically. Euro and the pound. You only want to take one or the other because they do the same thing. Resistance coming up. 150 ADR would be the perfect spot to get into that one if it gets there. Weeklies, we've got Swiss yen off today again. Swiss yen. So your weekly ranges hit on that. Your weekly ranges hit on the euro odd. We've got the weekly range hit on the pound yen and the pound New Zealand. So there's some weekly range hits on Tuesday, which is a strong move. Basically, we don't usually get weekly hits, especially at the moment with these tiny little contracted weeks we're getting. That's quite a big move. So if you're getting into anything Australian and pound related today, just bear in mind we've got the New Zealand dollar CPI coming out this evening. Again, they are forecasting a bounce. If we don't get the bounce, that's good for the New Zealand dollar, which will obviously potentially drop it ever so slightly. Well, good for New Zealand if the CPI comes down, so it'll drop the currency ever so slightly. But after we had the interest rates on the New Zealand dollar changing last week and weakening the New Zealand dollar, or rather, last week? Yesterday? Yeah, it was last week. Sorry, there. We should be looking for that kind of movement, really. The New Zealand dollar should be weakening this month, but we'll see. So there we go. So there's your ADRs today. RSI's lit up like a Christmas tree. There's quite a few of those to look at. Just quickly catch up on the chat. Afternoon champagne. Where would an appropriate psychological level for US dollar yen? Round numbers. There is no no resistance anymore. That's it. We're out of highs, so there is nothing. We're at not so much all-time highs, but pretty much. This is going back to 1999. This chart. So yeah, in the last 2.5 decades, we haven't been this high. So you can forget anything past that. So psychological levels are big round numbers. 140, 154, 155, 156. You can use halves. We are at half at the moment. 154.6 we're at now. Some people like 3/4. You know, it psychology when you're out at all-time highs like this doesn't really so much come into it. It's more price action. You see the market reacting to somebody selling a load, and then if enough reaction happens, you get you get a kind of an exhaustion. When the exhaustion happens, that's when you tend to get the move. But at the moment, with this US dollar powering up so fast and so hard, the only thing really that's going to save this is the Japanese. As I keep saying, they keep talking about intervening, talking, not doing. So it's not so much a case of I don't think a psychological level will get hit and trigger a move. The Japanese will trigger a move. If they don't know. Ask Bloomberg. They don't know. No one's been in this situation ever. So what do you do in a situation you've never been in? Whatever you want, you guess. Nobody knows what happens when the Japanese don't intervene because it's never not happened. So it's like the Swiss franc peg. Yeah, the Swiss franc used to be pegged to the US dollar as a currency to 1. The Swiss franc never got above 1. Couldn't. So it was a case of when it hit 1, it came off. We knew that happened for a fact every time. Then they removed the peg and it collapsed and everybody went bankrupt. Never happened before. This has never happened before. We've never been above this level without an intervention. What happens next? Flip a coin, really. Nobody knows. You can't ask anybody in any central bank, government, or any financial institution what happens next. They don't know because they've never been here. So we're sitting here at all-time highs. The Japanese are talking about intervening and not doing it. Either the market will continue to rally and the Japanese will just get poorer and poorer and poorer and make it impossible for them to trade, or they'll do something about it. It may be now that the Bank of Japan has run out of money, can't intervene, can't liquidate any more assets to move the market fast enough. It may be that their positive interest rate regime now means that they will not do any interventions in the future. Who knows? Who knows? But yeah, Euro Swiss was pegged at 120. Yeah, something like that. Don't know. Can't remember. It was ages ago. But yeah, the Swiss franc was pegged like the Hong Kong dollar's pegged. You know, when they remove pegs, things explode. But these are things you can't foresee. They just happen, as this is happening now. You know, we're out into levels where stuff goes wrong. In my opinion, we see a US dollar drop when Trump wins the election. Yeah, when's that going to be, though? Don't forget, Trump is good for the US dollar. Yeah. He puts America first. That means money, making money. US dollar does well. As Trump was very fond of saying, wasn't he? The US dollar has become richer than ever under his leadership. Stocks have gone up. Everything's gone the right way. Just happened to coincide with other stuff going on, but he took all the credit for it. We'll see. But at the end of the day, it doesn't matter what happens with the US dollar. This particular instance is nothing to do with the US dollar. This move is to do with the US dollar, but whether this goes up or down, it's got nothing to do with the US dollar. It's whether or not the Japanese are going to actually pull the finger out and do anything about it, which we don't know, do we? So we will see. We're up at the levels where, you know, something's going to happen, isn't it? So we'll see what happens. But RSI on the 4 hour, obviously up at levels, at silly levels again, where we were here. But all we did was consolidate and rally. Yeah. And the US dollar's been doing this as well. If you look at the US dollar Swiss, it's doing very much the same thing. We're stuck. Yeah. News, stuck. News, stuck. All we get at the moment. It's just impossible to trade. I was running some simulations. In fact, I've got one open here. If you look at the this is daily pound US dollar, yeah. So this is ADR levels, historical ADR levels going back to just after COVID, basically. We are just coming out of our lowest ever average daily range. So this year, the first 3 months of this year, ADR has contracted to levels we've never seen before. Stock market's contracted by 30% lower than we've seen before. Everything is coiled, like ready to explode. As you can see it on the chart here, we are just ready to do something. Everything is. But when you look at the actual ADR, where we got to with ADR, look. So this is February this year, and this is January. So this is where we kicked off the year, yeah? Going back the last 4 years, we have never had average daily range contraction like this, ever. Yeah, everything. And I hate this word. You know, I hate this word, unprecedented, but we're saying it a lot at the moment. This situation for the first 3 months of this year that we're in is weird, bizarre. It's not happened before. Range is contracted, stuff moving nowhere for weeks, sitting there doing nothing. US dollar managing to exceed yen expectations and them doing nothing about it. There's so much going on at the moment. Conflict, oil price. This thing is telling the story, ADR. This is not happened before. We haven't been down here. Yeah, look at this line. We just don't get to these levels. Even when the market's a bit quiet, it's still moving, yeah? When you got ADR contraction, as you've got here, here, and here, you still got market structure in place. Still got market movement happening during the contraction. This is lower than ever and sideways, basically, for the entire year. The entire year. We haven't gone anywhere all year yet. We opened here. We're still here. It's just not moving. And this is the same across multiple currencies. It's just ridiculous. So look at this. So this is the Euro CAD. That's the lowest point we've had since COVID. Look at where we got to down here. Just move the line down. Yeah. February was the most contracted month we've ever had on the US dollar CAD and the pound US dollar and all the major pairs. This thing's just ready to do something crazy. And when you get these situations which haven't happened before, there's nothing you can do. There's no strategy on the planet that's ever going to work in the same way as it ever has before, because we've never been here. No range breakout strategy is going to work because we're not doing anything. We are in a range. If you're mean reversion trading in a range, fantastic. You're probably making some serious money if you can find the tops and the bottoms of these ranges. But the thing's not moving far enough for you to actually make any money because the ranges are so contracted. So I was doing a little study here. So this is ADR and this is average ADR. And I was just looking for some correlation basically between what we're seeing here. So this is January. Yeah. January, we started to drop to lowest ever levels. February, we dropped below lowest ever levels. And we just haven't moved out of it. Just haven't managed to get out. And March, was when we dropped to the lowest ever levels. Yeah. And now we're pushing back up. We're halfway through this month. We haven't even got up to the volatility we had in February, which was lowest ever. Then we went into lowest ever again. Yep. Go back and look at previous elections. This has never happened. I've done this research. This is why I've got this chart up, because I've been researching this for the last day, basically, trying to find a period in time where this has happened before. So that's COVID, look. Yeah. This is COVID. This is post-COVID. This is pre-COVID, going back to 2017. We've never been here. We've never been here. Yeah. In the, since I've been trading, basically. So, this is, I'm not making excuses for the way this market is at the moment, how difficult it is to make money, because I'm having a hell of a year so far. It's been awful. But you can see why. But what you do in this situation is impossible to guess or judge or come up with a strategy for, because there's nothing we can do to backtest this. We can't go and look at a period in time and say, what should we do in this? Because we haven't had it. So this is why. And I just wanted to do some analysis to find out why I'm not making much money this month and why I didn't make, I've not had a bad year, but it's compared to previous, it's awful. And I just wanted to see why. And obviously the problem with my particular strategy is it relies on market structure. We're riding the waves of the banks. And as I've just shown you from something like the US dollar Swiss, there are no waves. There are nothing. Push, nothing. Push, nothing. That's not a wave. That's two moves. Yeah. Going back to February. 2 months, two moves. That's it. Inflation and CPI. They're the only things moving this thing at the moment. And that's because we're anticipating. We're trying to anticipate those moves and they're not happening. So just wanted to sort of share that study with you, because I've been doing this, been living this thing for the last 24 hours. And it's just impossible to sort of come up with anything that you could change short term. So again, there, look, lowest ever. Now, all lower, everything is lower. So, there's nothing you can do with this market apart from look at what to do in a contraction, and it's wait for the break. When the break happens, you go with the break. Typical breakout strategy. So when you get lower in contracted ADRs, markets shrinking, you wait for that break to happen and you go with the break. But the break we know on everything virtually is going to be that, because the break we had prior is that interest rates go up, prices go up, interest rates go down, prices go down. We're just waiting. The first one that drops that interest rate, as we saw with the Swiss, the first major rather than safe haven that drops it, you just want to jump on and hold tight, because that's really the only thing you're going to do, because this is suddenly going to expand back up into normal regions, which is here. Yeah, so we're going to get back up to there, and that's going to be caused by that movement. So there's going to be a big trend breakout soon across the board on FX, which we kind of know because we're waiting for those interest rates to happen, but we're just not getting given them. If you look at the US dollar yen, in comparison, yeah, look at the volatility, the ADR on the US dollar yen compared to all other Forex pairs. Yeah, nice and stable, sitting there around pre-COVID and post-COVID areas. And then suddenly, 2022, this is the only thing really that's got any legs. Yeah, and that's how it's got to where it's got to. Next, that, and then probably contraction as we come back down again. But, you know, very, very difficult. But interesting study, because I've been doing a similar study on the DAX to see, you know, why the ORB strategy and the SIH strategy are struggling at the moment. And it is literally because we're 30% down on previous years, literally across the board. Yeah, go back 10 years and look at volatility. Look at this year. Almost half. Reduces your earnings potential by 50%. And on FX, this is all reducing your earnings potential as well, because there's no ranges or no movement. Yeah, the ADR is contracting, but without those breakouts, which cause profit take moves, stuff, doesn't it? Nothing you can do. So anyway, that was my last 2 days of stuff I've been looking at, or rather day. So RSIs, lots of them. When is the yen considered a safe haven? When anything goes wrong, basically. So safe havens basically are currencies typically with low interest rates and commodities which have limited supply. So things like gold, the Swiss franc and the yen typically have always been safe havens. What the safe haven status of the yen is now, though, I'm not sure, because it's not where it's been for 16 years. Don't forget, this is the first time in 16 years we put the interest rates up for the yen. Again, never happened before. So is it still a safe haven? We'll find out the next time a war kicks off. But the Swiss franc, basically, because interest rates are so low, you're not going to earn as much money, but it doesn't fluctuate. So you want to put your money, and we're talking like the sort of money where if things tick like that, you're going 1, 2, 3 million in interest. Yeah. So this is why you get these influxes into the Swiss franc, because the interest rates are low. So you want something that isn't going to be adversely affected heavily, but equally you're not going to make a lot on it. You just want to keep your money somewhere safe, called a safe haven. Gold is a similar thing. So gold price doesn't fluctuate. It does intraday, but it doesn't fluctuate madly. So anything that happens which causes the market to go like housing crisis, war, earthquakes, tsunamis, anything that's detrimental to norm, anything adverse, yeah. And that's what basically safe haven run is. One of the US banks suggested it could go as high as 160 on Bloomberg this morning. Yeah, but this is what I'm saying. Yeah, one of the US banks has said it could go to 160. Yeah, what happened with oil last year? Remember they said where oil was going last year? Nowhere near it. They forecasted $10 above where oil was going. They were completely wrong because they had no clue. Yeah. I don't care who you are, right? What you're basing that on. Yeah. Unless you can qualify a reason for that to hit 160, I'm going to say it goes to 175. Go and broadcast that on Bloomberg. I've got as much chance of getting to 175 as they've got of going 160, or it turning around at 155. I've no idea. Neither have they. Nobody knows where it's going now because we haven't been here. I just shown you that study. Yeah, we're at levels we haven't been to before on anything. Yeah, no one's been anywhere in this situation. So what happens next is, and don't forget, we've got the war hanging over everything as well. It takes one missile to go into the wrong country and everything kicks off. So this is kind of why I think we're like this at the moment. Everybody's scared to do anything because nobody knows what's going on, do they? Bloomberg, there's a, people used to sit there and watch Bloomberg, and whatever they said on Bloomberg, they do the opposite of it. Normally it's true because all they're doing is they're talking heads going, I'm going to say this because I'm a well-respected blah, 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 blah with a 50% strike rate. Chances of it going to 160, the same as it going to 140. 50%. But unless they've got some reason they've qualified it because they know someone inside the Bank of Japan that's confirmed that there's no intervention coming, and they know that the US dollar are going to raise interest rates this year because they've got a backhander they're talking to Powell. Fine, I'll believe you. Other than that, it's pure speculation, isn't it? Who knows? Hopefully they calm before the storm, yeah. But this is the thing with the storm. You do not want to be mean reverting a storm. So I'm at the moment considering what to do over the coming months, because what I do not want to get stuck in is a load of squeezes. The first one that goes, and I kind of want to be trend pullbacking it. So kind of like I said the other day, the directional bias scorecard, I'm considering jumping on board with this as soon as we start to get really close to those interest rate changes and basically trying to take a bias. So as we've had for the last 18 months, everybody is going to be bullish. Yeah. And the movement is caused by, I'm bullish because my rate is announced, you're bullish because your rate is announced. I'm bullish because my rate is announced, you're bullish because your rate is announced. And that's what's going to happen. And that's what happens on the way up. What's going to happen on the way down is I'm bearish because my rate has dropped. You're bearish because your rate has dropped. I'm bearish because my rate has dropped. And we're going to get the opposite. The inverse is going to happen. So what you don't want to do is assume at the moment we are going to get that kind of movement. Yeah, I haven't seen it this year so far, but that's probably because we're coming out of the back of that. So I would rather get less chances to get into trades in line with that. So shorting euro, US, everything against the US dollar, basically, you kind of want to start to be thinking bearish on now, because that US dollar has rallied because their rate doesn't look like it's coming down. There is potential for that US dollar not to come down this year. If that CPI number does not fall in line, they will not be able to drop that interest rate. Everyone else is. Euro coming down nicely. Aussie coming down nicely. CAD today coming down nicely. Everybody's coming down nicely. They're not. Something's going wrong. So there's an argument for changing bias on everything very, very shortly. So I need to think about that. That's why I'm kind of doing these off the cuff studies, trying to identify, what the hell is going on, because stuff's just different. No, different at the moment. Right, RSIs we'll look at. ADR low, does it mean low cash flow in the Forex market? Yeah. Well, it's low range. Average daily range is low. US dollar yen pushing again. So the average daily range is basically lower than normal. A lot lower than normal. So all ADR is the high and low of the day. Yeah. So that is your average daily range. So that is your range that day. That is your range that day. the average is that plus that divided by 2. That's your average of those two daily ranges. So when you get a market that moves like that and that and that and that, you get these 1 out of 10 days where there's movement. The rest of it is contraction. So there's still volume coming in, high volume, but there is no direction, no directional movement, no strong directional movement. This is why I'm, struggling to get into positions. Not getting any RSIs because there is no relative strength in the market, which is why I was looking at ADR extensions from moving averages to try and replace the RSI for something that is just measuring distance. But even that doesn't make a lot of difference because it's got to move, isn't it? And you're only getting things like this happen, but this is only happening because of the news. And the news is not what we were expecting at all. It's the total inverse. Everybody's expecting an 18-month rally, sideways for a year, an 18-month drop. What we just got is potentially the US doing that. Not what the banks were expecting at all. Pound New Zealand. That is on the list. 4-hour RSI extension. Monthly high. So we're approaching 120. Well, we're 125 ADR now. Monthly high. So good potential contraction. This is the kind of movement that I would be expecting on the way down, basically. So as long as it does that, this is why I have this 24.72 moving average. Yeah, in a trend, you tend to pull back into the 24, into the 24, and you keep doing that until you don't pull back you don't come out of the 24, you push through the 72. You tend to then bounce off the 72. When you're in a range, you just cross through it all the time, which is what we've been doing all year. But yeah, so that's a nice monthly high. You've got one more level coming up there. You got a high there as well. We sold out of that level, which is there, and then obviously up there. So if this high breaks, this monthly high, there's no real stopping power until we get up to 14. But, to get from there to there is the equivalent of what we've done there to there, which takes a long time at the moment. So you've got potential week's worth of movement to get up there. Any news event that comes out in between those times is going to potentially drive that back down again. So good looking short. Yeah, same as that. So yeah, good looking short opportunity if you're taking 4-hour RSIs. UJ new high, is it? Yeah. Afternoon, Neo. So low ADR does not necessarily mean low volume, low cash flow. No, it just means the range is low. You can squirt $1 million into the market. If that whole $1 million is long, it will do that. If you squirt $1 million into the market and $500,000 of it is long and $500,000 of it is short, it'll do that. Yeah. Don't forget, all you're seeing on a chart is a differential between currencies. So if everybody is buying the US dollar and nobody is buying the yen, it will make that move. If 50% of the people are buying the US dollar and 50% of people are buying the yen, it will go buy some dollar, buy some yen, buy some dollar, buy some yen, buy some dollar. If you get 75% of the people buying the US dollar and 25% of them buying the yen, it will do that. And that's typically what happens. You drive into a move, you scale out of a percentage, you add more into the move, you scale out of a portion of it, you add more into the move. That's market structure. That's what the banks do. They buy, they sell a fraction. They buy, they sell a fraction. So yeah, you can have the same volume come into the market, but it not go anywhere, and it have less range during the day, but not because there's less volume, because there is an equilibrium of buyers and sellers, an accumulation. Yeah, push, accumulate, push, accumulate, push. So all this is the market buying and selling from each other quite happily. Similar volume. Not that you can see centralized volume in the Forex market, but you can get the same volume but no movement. And this is what we're seeing. You've got no way of knowing. No one can tell you because a lot of the transactions in Forex are over the counter between banks. You don't actually see them. So you can't tell from a volume perspective what's going on at all with Forex because it's just broker volume, which is literally just your broker and how many orders they've got coming through their books. Morning, Matt. So let's quickly go through the rest of these RSIs. US dollar yen, obviously we know about. We're on that. It's 4-hour RSI extension, massive extension, nice big move away from the moving average. Yeah, so we should get a pullback on this at some point, but this thing's just not stopping. I suspect they want to take it up to the 155 level to test it. As long as the US can push it, they will. Everything that they get from Japan suddenly becomes cheaper. The more this goes up, the cheaper it gets. The better it is for their economy. The more money the US dollar are going to make, the less the Japanese are going to make. Yeah, when their manufacturing turns around and says we're going bust because this is too high, that's what the Japanese tend to do. This is what they're talking about, the intervention. It can't carry on because they can't continue to make money on their exports. But not. So, nothing you can do. It's just moving. So that's massively extended. Obviously, hourly is also extended now up there as well. So again, look, big, strong push sideways. Big, strong push. All we're getting at the minute. So we have got now showing across the entire week, the entire last week, bearish divergence. So you can see that the relative strength is dropping. Yet price is continuing to push. So there is a big bearish divergence in play at the moment, which is typically a trend exhausting. So divergence is basically a trend reversal signal. We have got that. So, this stuff is pointing towards, but, we've had bearish divergence here. We've had it here. We've had it here. Yeah, loads of, this is why I don't trade divergence. It's just a signal like everything else. Strike rate is whatever the market decides to do after it. But it is confirmation or a confluence, if you like, to go with what's going on in the market. US dollar CAD extended on the 4. Yeah, big, strong push on the US dollar. Not expecting what happened with the CPI. So again, market now going, we're not dropping that. So therefore, if everybody else, this isn't necessarily the market saying this US dollar is now strong because they're not going to increase their interest rates. What they're not going to do is decrease them. What that means is if they keep their interest rates stable and everybody drops their interest rates, by default, the US dollar becomes stronger because they become weaker. So this move here is not this one that we're seeing here on the US dollar CAD today, not necessarily US dollar strength. It's Canadian weakness driving that. Don't forget, this is the world's currency, the US dollar. So if everything starts to drop, the US dollar by default goes through the roof. And again, you'll probably find the stock market will start to drop as well. US dollar CAD, New Zealand dollar, US dollar also extended. Again, everything's going to be extended against this US dollar. And again, Powell today could just send us back up to here. It's not unusual for Powell to say, guys, what the hell are you doing? We've never said we're not going to decrease the interest rates. Where did you get that idea? You'll be 225 ADR in the opposite direction, looking at a V-shaped recovery by 9 o'clock tonight. If he says that. But, we have no idea what's coming. So, but at the moment, obviously, everything is now getting bearish against the US dollar with the current state. So lovely mean reversion opportunity. Again, extension, play out of it. Same thing as usual. Pound New Zealand also massively extended 4 hour. Again, we've looked at this one already. Yeah. So we're just looking for that pullback off the highs. We're straight through it this afternoon. So Pound New Zealand now through those highs. Going out into new territory. Next stop, somewhere up in this range or up here. So got this whole area here potentially where we're going to start to find sellers if it isn't just a false breakout and a drop. Pound odd extended to the upside. So that's approaching weekly range high. Again, we've got multiple levels on this one, and it is sort of bearish, but the Aussie and the New Zealand dropping very, very hard at the moment. So 125 ADR on that one. Sorry, that's the odd, that one there. So again, big, strong push, extended almost up at that 80 level. If we can get up to 150 ADR today, you'll probably find a good kickback there because there'll be limit orders set there. Get short. So good looking opportunity for shorts. That's extended on the hourly as well. Euro New Zealand. So first entry short just taken on that one. We've got New Zealand dollar news tomorrow, so I'm going to go with a fairly big TP on that. But we're up at the weekly and monthly highs on that. So that's a very nice level for shorts. Obviously, same as this. You could well get stuck for a week where the market just doesn't pull back from the area, but that's what we typically find on the way up, pull back. Again, not always the case. Euro New Zealand. Euro odd also extended. So again, these two pretty much the same thing. Euro New Zealand or Euro odd. Both pretty good opportunities. Swiss yen. So again, Swiss franc at the moment. If you look at all the Swiss franc pairs, Swiss franc's not doing too bad because we've got problems at the moment, obviously, with what's going on in the Middle East. So you get the safe haven runs. So the Swiss franc's starting to power up a little bit. That yen, obviously, as we know, people are piling out of the yen still. So yen weakness crossed with Swiss franc strength gives you that big, strong push. So again, RSI extension to the upside, same as that. Unlikely we'll see a move like that unless it's a Japanese intervention, which is what you'll see, but it will be way longer than that. If we get a continuation in this escalation in the Middle East, we will see money probably pile more into the Swiss franc as well. So that's got potential to move even stronger. But obviously that will depend on the yen. So everything yen is going to depend on whether or not the Japanese pull the finger out and actually do something. Aussie US, big extension to the downside. Aussie dollar, New Zealand dollar really getting hammered at the moment. US dollar strong. So that's the perfect storm. Again, nice divergence. Well, it's not actually divergence. Still going down. But rate of drop, obviously, compared to RSI is starting to smooth out a little bit. But we've got no news really on the Australian dollar of any impact coming up. And unless Powell comes out this evening and says something to put the brakes on this US dollar, that's unlikely to happen. So it's whether or not we get just a continuation of flag breaks, which is what we're getting at the moment, or whether we start to get that pullback and then normal market structure resume. So we'll wait and see what happens, but there is a long opportunity there. It's very, very extended. You've at least got a pullback on that leg of some description, potentially that. And obviously there is, if they come out and say, actually, guys, you're wrong, we are going to drop the interest rate sooner than expected, we'll be back up there anyway. So all depends what the talking heads come out and say in the next 24 hours. Aussie dollar Swiss extended just about. We're stuck and embedded down there again. Swiss franc power up, Aussie dollar getting hammered at the same time. So this Swiss franc now, obviously, because they've dropped their interest rates earlier than expected, has weakened the Swissy. So there is potential that this is just a pullback, but this is the first Swiss franc rate drop. Whether they continue to drop rates, we'll have to wait and see, because at the moment, the Swiss franc, the Swiss franc inflation figure, when it loads, is basically lower than where they want it. So there is an argument for dropping. We were down at 0.75 negative interest rates on the Swiss franc. The only reason we're sitting up at these levels is because of what's happening with everyone else, and they've basically increased interest rates. Otherwise, they would have been ridiculously impossible to do business with. So what they're looking to do is reduce as everybody else reduces. So whether or not they continue to reduce at 0.25% per month and fall in line with what's happening there, we'll have to wait and see. But they're in danger of going into disinflation. So it's very difficult to forecast what's going to happen with the Swiss franc. And obviously with the Swissy, it will just tend to get pumped or dumped depending what's happening in the world anyway. So hard one to call the Swiss, which is why a lot of people don't trade it, because it is one of those currencies which is often completely impossible to fathom. So at the moment, obviously, it's pulling down. So we're looking for a pullback on that leg. And we've also got Aussie dollar CAD extended. That's just started to pull back, obviously, on that CAD weakness. Wait and see if that continues. Let's quickly look at Euro CAD. So getting a bit of a flag forming at the moment. So again, potentially this could rally, but we've got Macklem speaking later. So what I would probably anticipate happening is that until 6 o'clock this evening, until we hear from the talking heads, which is obviously going to be all of them. Yeah. So it's there. So we've got Bailey, Macklem and Powell all this evening. So big potential moves. Your only hourly extension is the Swiss yen, which is nicely extended on the hourly. Just got to that 75 level, just. So intraday pullback on that leg. So these highs obviously is your obvious support, which we've tested multiple times, couldn't get through. So that would be kind of the line in the sand you would expect to get held or coming down into these propulsion gaps. We are moving up into that previous sell on the Swiss. So got high, low, lower high, lower low. We're going to continue market structure. This is around about where you would look for shorts. So a nice extension to the upside. So we'll see what happens. But everything mental at the moment. Can use EA to trend only to avoid squeezes. Yeah. So you can just set it to go long or short only. Entirely up to you. So market reversal alerts EA you can use with a moving average. The position trader EA hasn't got a moving average, but you've got a filter to go long or short. So if you want to go with trend, you just say, I want to go short only or long only. But I've had this conversation before. What is a trend? What do you define as a trend? I included a moving average in the position trading in the market reversal alert CA because that is what most people tend to want to use as a trend. Market structure is trend. Yeah. So this is green at the moment. It's above the 24 and the 72 moving averages. So if, let's say you were using those two as your trend filter, you are looking for only longs. Now, I would argue that we've had a reversal alert there. We've put in a low, a lower high, a lower low, a lower high, a lower low. I would be looking for shorts personally, not longs. But your moving average is filtering to tell you that you should be long in it. Personally, market structure short. So I would be looking for shorts. So you're better off using whatever you use as a filter for moving average and setting it manually in the EA and saying, right, or, your filter for Euro US dollar could be Euro is going to reduce their interest rates. Dollar are pushing their interest rate drop back. Therefore, my bias is short. Yeah. Hasn't happened yet. But that is over the next 3 months, you're thinking it's going to go short. So the moving average has got nothing to do with that, has it? Look at something like the US dollar CAD here. Yeah, so this is going back to January. Yeah. What's your trend filter for the last 3 months? Can't use any moving average. Moving averages are absolutely useless. They're the most useless indicator on the planet. Everybody bases their strategies around them because they're easy. Yeah? And everybody wants to get into trading, wants simplicity. Let's use a moving average. So if for the last 20 days it hasn't been going down, you buy it. What's that got to do with today? The last 20 days of it's slightly gone up have got nothing to do with whether or not today it goes bang because there's been a news event. Yeah, moving averages do not control price. They tell you what has happened in the past. I can see that on the chart. It's gone sideways. Yeah. So your filter for which way you trade should be based on where you think price is going to go. And it's either because it's going to hit that and you think it's going to short because there's limit orders sitting there and going to drive the market back. So you go short, or you're going to go long only, which means that you're going to wait for a pullback and wait for RSI to get extended to the downside just to go long because it's broken out of a range and it's now starting to trend. Yeah, what it's done here has got nothing to do with what it does for the next 2 weeks. If Powell turns around this afternoon and says, guys, you're wrong, we're going to drop the interest rates in June, and Macklem comes out and says, although this drop is looking good for inflation, we don't think we're going to get anywhere near where we want to be this year, so we're going to go back a month. This thing is going to go like that. That is useless. Didn't even get to that. Yeah, and your pullback theory is out the window. Not because of anything, but the fact that Powell and Macklem said something. Yeah, so you can't use indicators for trend. Every now and again, you will find something where fundamental, I mean, you can't look at any price action for the last year because it's all a load of rubbish, but fundamentals have shifted short. Yeah, that works beautifully. When a market is trending because the fundamentals say it should stay trending, that's where you use moving averages for pullbacks into and bounces out of. But for catching the starts and things like that, no use whatsoever, are they? How's my drawdown? About 19%, 20% probably now. 18. Too big. So that's the loss I took yesterday, 4% on the US dollar yen. On that scale out. Had to get out of some because it's just not stopping. So that was that trade there. Swaps. Just want to press the long button to trade this thing at the moment, but you can't because it's up at levels where the Japanese said they're going to do something. So I feel royally shafted by the Japanese at the moment, I have to say. You probably got that impression from what I was talking about with them yesterday. But yeah, not helping me at the moment, the Japanese. Drove through tomato. Sorry, I read that wrong, Franco. Drove through tomato winds to get here. Tornado winds. It looks like tomato to me, but it's tornado, isn't it? Wow. We had tornado winds in the UK, actually, yesterday. Somebody's caravan got blown over. It was on the news. That's about as bad as it gets in the UK. Afternoon, Brian. 90 people in here, less than 10 likes. Thumbs, guys. We're on a John Wick mission at the moment. Ooh, God, go away. We're watching all the John Wicks back to back, weekend after weekend with the kids. They love it. Maybe they shouldn't be watching it. A little bit old for them, but anyway. I can't watch any cartoons. My kids are old enough. Right, that's all I've got for you today. There's nothing much else to discuss. So basically, we are waiting for some news as to what is happening with this Japanese yen. So when we get some kind of movement on this or confirmation from somewhere as to what is going to happen next, we'll have a much better idea of where we should be going with things. But at the moment, this market is totally irrational, totally stuck. And, you know, this kind of says it all, doesn't it? Yeah. That is literally all we get at the moment. So your kind of strategy for the last 3 months and probably the next 3 months of the way it's going at the moment is just to take breakouts and take a 1.5 hour on a breakout. And that's it. Trade the news, because that's all that's moving the market at the minute. Other than that, it's just not going anywhere. So stuck is all I can say at the minute. Can we send John Wick to Japan? Yes, that would be fantastic. Just to press that button. Press the sell button on all of their overseas assets. That's what he needs to do. Probably have to kill quite a few people to get through it, because I imagine that the Yakuza probably control the Japanese yen. But he'll have no problem with that. I just watched John Wick 3, and there was a load of Yakuza in that. Killed them all. No problem. So, yeah, good idea. Send John. Afternoon, Kennelly. You're late. Right. So I'll be back tomorrow at, when am I back tomorrow? Morning session tomorrow, I think, because we have the CPI for the pound tomorrow and Bailey speaking tomorrow evening. So there's no other news. We've got Lagarde speaking as well. That'll be interesting. So there's no other news tomorrow apart from that CPI number. So this evening we have got the potential. Let me just see where Powell is this evening. Fireside chat about economic trends at the Wilson Center. I'm not sure necessarily we're going to get the right questions asked there, but you never know. So just be aware, obviously, anytime they talk, there is potential for movement. So just be aware. CPI for the New Zealand dollar is the main overnight news, and then CPI for the pound tomorrow morning, which is the year-on-year figure. So we are anticipating a drop there. So there will be probably good movement on the pound tomorrow morning if you've got any pound exposure on. So keep your eyes peeled on financial juice. We're still waiting for some confirmation of what's going on with the Middle East conflict. We're still waiting for something from Japan. Easing will likely be appropriate later this year for the Fed. We know you've said. I've got a feeling this Iran thing might peter out. I think the Israelis are going to be taking revenge in a completely different way other than missiles. So we might see a de-escalation happening in this, but we'll find out today. They've said they're going to be talking later today. So, excuse me. So tomorrow I'm back at 8 a.m. We'll look at the CPI figures for the pound, see what impact they have had. So if you've got any pound exposure on, be prepared for some big moves tomorrow. Market seems to be buying into this number. So there is potential tomorrow for that to come down and completely undo at least half of that move. However, they may be buying into the fact they're expecting this CPI figure tomorrow to come out higher than 3.1, which would put back the interest rates on the pound and therefore not weaken it, not necessarily strengthen it. But so that is, we're seeing some massive deviations at the moment, aren't we? As you can see today, and the US figures. So there's potential for a big deviation there as well tomorrow, and the New Zealand overnight, obviously. So watch these figures. They seem to have them completely misforecast this month. So we'll see. But that's what we've got coming up. So yes, I'll be back tomorrow. Fireside burning of dollars, pretty much. I think that's probably about it. The Israelis are going to drop 1 million pork chops on a run. Will they be halal? Who knows? So yeah, so just watch this pound odd. This is coming up to a really good level, pound odd for a short, with a potential quick scalp. Stop. Fairly tight stop. Third quarter of an ADR, maybe. Play it back over the next couple of days. Anyway, it's not a bad idea to get into a pound trade at the moment, especially a short. If that we got that CPI figure coming out, so there is potential for a nice little short opportunity. Get in, put a little stop, half an ADR away, or a quarter of an ADR away, or a third an ADR away, somewhere up here, and give the market room to breathe over the next 12 hours. And then tomorrow morning, you're either going to be wrong or you're going to be very right, aren't you? Thank you, Champagne Pappy, for a pine today. Thank you, Lee, for a pine. Pine? You mean pint? I think I need one. Thank you very much, Champagne. It's very kind of you. €5. I will buy myself a pine. I haven't got a pine. I think I've got a pine cone downstairs, so I could use that. I might find that. But yeah, thank you very much. Very much appreciated for my pint. We had that. So who was it yesterday? No, not yesterday. Somebody the other day, wasn't it? It'll be on my Streamlabs software. Somebody tipped the other day, didn't they? Who was it? David. No, it was someone else. But they managed to type everything completely wrong when they did it. Must be something to do with the fact that you're putting it into chat and you have to concentrate. But anyway, thank you. Very much appreciated. I don't apologize. It's fine. Right, thank you for that. I'll be back tomorrow, and we will see where we go with the pound. And just keep your eyes peeled on this thing, and obviously just keep your eyes peeled on the yen, because we are at levels we are not used to here. So fingers crossed. I'm hoping we get that big drop. Oh, just before I go. Everybody's still here? Yeah. Just before I go, Euro odd just hit 125 ADR. Oh, hang on, and Brian's just sent me something. Yeah, we go. Brian sent John Wick to Japan. You know what I'm going to say, Brian? What's wrong with his hands? There's one very large finger. And some weird thing. In Parabellum, he does have his finger chopped off, doesn't he? So, sorry, kids. He's got weird glasses as well. So, yeah, there is a possibility that's why he's got a bad hand this time. He's got a bit of a fat hand over here as well, hasn't he? But, yeah, John in Japan, that's what we need. John Wick in Japan kicking the yen's ass. So that wasn't what I was actually going to cover. What I was quickly going to cover was, if you were in here yesterday, I said I was going to... Tuesday, isn't it? Yeah. Don't get it. No. I was going to set up a new EA to trade sentiment. So we were talking about sentiment. So I'm just going to quickly cover this before I go, because I've set it up and it's running. So this is obviously retail sentiment. Idea being, depending on who you are, what you think, you either trade with sentiment or you trade against the sentiment. So at the moment, Aussie dollar, New Zealand dollar, 92% of the market is shorting it. So because they are shorting it, typically you would expect it to go the other way, which is what tends to happen. So I've built an EA which automatically goes and gathers the figures from the website. And as you can see here, it grabs those figures in. So there's 92% short on the CAD yen at the moment and 8% long. So if we find CAD yen, there we go, 91% 9, because it hasn't updated yet. But yeah, so it drags these figures in from the website. And basically, all this EA is doing is at 9 a.m. before the UK market opens, so that is 7 a.m. UK time. It either trades with the sentiment or against the sentiment. So this account, I've got two accounts set up. This account, you probably can't see this either because it's tiny writing, but it says with 1 against 2. That's a 2. So this account is trading against sentiment. So if the market is short, this takes a long. And what it does is at the end of the day, if that trade is in profit, it closes it. Big move going on the yen, guys. This is an hourly candlestick. This is a massive move on the yen. This is an intervention potentially. So let's just watch this. Let me just get financial juice up. Something's going on. Nothing on financial juice. Okay, so we just had a 100 ADR move, 1 ADR move in one candle go in there. Yeah, definitely yen. It's not big enough for an intervention yet. Come on. That's because John Wick went over. Literally, we sent John Wick over. Immediately, they've done the job. Just keeping my eyes peeled on financial juice. There's nothing coming through at the moment. Not big enough. It might shock the market into dropping it. Send him again. Yeah. Right. He's back. He needs a bigger gun, Brian. Get him an Uzi. No, don't get him an Uzi, actually. Get him a shotgun. He's good with shotguns. So I just want to see what's happening with the oil price as well. Rallied. Okay. Not quite big enough. So that was an ADR. So that was 75. 76 is ADR. So that was basically a 1 ADR dump into the yen. I don't think that is enough movement. So this is a previous intervention move. Yeah, this is obviously the 4-hour chart, but if I mark it up. So this is a minor intervention. We look at this on the hourly, which was 3rd of October. Yeah, so this here, this candlestick from there all the way down to there, which is 265 pips, that all happened within 5 minutes. Yeah. So these moves that we see that kick in like this is what we had prior to the previous intervention. So the big intervention that was prior to this, this is the movement that we saw happening before it. So there is potential for this to be a shot across the bows, basically. Yeah. So that was the major intervention that started the yen rally last time. That was the move, which was 800 ADR. So we would expect this to happen within an hour. So we'll see if this is just a big order coming in, which might be just a profit take move, but we'll see. Give it the hour, another 15 minutes, and then see what happens in the next hour. If we start that type of movement, it's a good chance this might be it. Gold is also moving crazy, is it? Right. Yeah, we'll see what happens. But massive data push knocked me offline. Yeah, it might be a small warning shot. Yeah. We'll see. Will I stay online? I'll carry on talking about what I was going to talk about. We'll see if anything happens to it. But no, what I mean, again, as I've been saying, all we have to go on is what's happened in the past. So we can go back and we can look at previous intervention moves and see how they were executed. Typically, the way they are executed is in one go. So the whole idea of the intervention is to stop the move dead in its tracks, literally just to stop them. So what they do is they, at once, en masse, they liquidate overseas assets and convert them into yen. So what you see is a huge yen order hit the market, and it's literally within minutes, they are liquidating trillions of dollars, trillions of yen. So you tend to see the candle do this, and then it will pull back. And from that point, wherever it pulls back to, it will just then start to go from there. So that isn't big enough. That's an ADR. We haven't had an intervention that's an ADR. Every intervention we've ever had has been 300-400% of ADR. So this is 225. So I would expect any intervention candle to at least exceed that level, 225. But that's how they've done it before. It could be a case of, we've told you, you didn't listen, push us again, and then we'll do it. This could be a, oi, stop it, and then the market will stop it. So this could be enough to shock the market into crap. Yeah. Imagine sitting in a bank right now, sitting on $100 million worth of profit on a counter yen trade, and suddenly seeing that 100 million turn into 75 million, and now turn back into 80 million. What are you going to do? That was lucky. We nearly lost that lot, John. Right. Well, let's get out of it now. Then they will start to liquidate their trades. And this is where you get that climbing up the elevator, climbing up the stairs, falling down the elevator shaft pattern. But it's not really moving fast enough. We had this yesterday, look. This move here. Yeah, we had a 5-minute candle, which was huge. And then it retraced the whole lot immediately. And ended up looking like that. We'll see. We'll keep an eye on it. So if I go back to my VPS, because obviously it's got the yen on it. Oh, that's oil. I've got an oil trade going on at the moment as well, which I'm scaling into. Because if it kicks off in the Middle East, we're going to be back up to Ukraine highs. That's not the Ukraine highs. I don't know what I'm talking about. Nowhere near Ukraine highs. Ukraine highs are up there. I did this yesterday, didn't I? That's the interim high. So yeah, we're going to be back up here if it kicks off in the Middle East. If it kicks off in the Middle East, I was talking to my wife about this the other day. This move here that we had, which was 10 ADR in a week, which was when the crisis kicked off in Ukraine, and obviously oil price goes through the roof because of oil constriction. You go back and look at the Gulf War and what happened to oil price in the Gulf War. It wasn't a case of constriction. We blew the oil fields up. So there wasn't any oil pumping. Yeah, that is much worse. Imagine going from petrol station prices from here to petrol stations not having any petrol. What do you think happens to the price of petrol and oil then? This thing could be off the top of the chart. So I've got a speculative long that I'm building here. Again, it's a complete gamble play, but it's based on the Middle East conflict expanding and exacerbating. This is a $1,700 account. Just stuck $1,700 in it yesterday. That move there is going to be equivalent to $5,000 to $10,000. So it's just a one-off bang buy holiday type play. But if I can get a play started and we see that massive acceleration, I will just keep adding with using all the equity that I build, adding that in to grow that trade and looking for at least a target up there. But anyway, that's completely something different. So, so the sentiment. Here we go. So this account here is trading against sentiment. So 92% are short. So therefore, this has taken a long. This account, which I'm just going to flick over to now, is trading with sentiment. So this has got a number one. So this trades with sentiment. So this has sold the the CAD yen because 92% of the market are short. So I've got two accounts running. And the way the EA works is it takes a trade at 9 a.m., which is 7 a.m. UK time. So the idea is it takes a trade an hour before Frankfurt opens and an hour before typically the UK market starts to get going. And if that trade is correct, it will basically, so let's say it closes here. End of play today, it will just shut the trade out and go, thank you very much, put it in the bank. Then tomorrow, price action continues. When we get to 9 o'clock tomorrow morning, it goes, right, what's the sentiment now? If the sentiment is the same, it will go, right, okay, brilliant, we'll short it again. It will get in again. If price pushes against the trade, it doesn't exit at end of day. What it does is it waits for tomorrow and it takes another trade at 9 o'clock. So we average in. Yeah, but there is a stop loss. And the stop loss is 3 ADR away from price. So 625 is ADR. This stop is 1800. Yeah. So what it's doing is basically saying we are trading in this case with sentiment. 92% of the market is short, so we go short. If this is in profit today, close it out, and then tomorrow have another look. If they're still short, go short. If that trade doesn't work out, wait and see what happens. Tomorrow, the next day, if they're still short, go short again. Average into the trade. If the market then pushes in our direction, exit at end of play tomorrow. So the idea is I'm testing whether it is better to go with sentiment or against sentiment. I know what the answer is already because it's all verified. We've checked it many times before, and the market does the opposite to sentiment. However, some days the market is right. Today, the market is right. Yeah. So that is absolutely fine. But what the market is usually is wrong over a period of days or a week. So when you look at the sentiment compared to market movement, virtually always, if there is a strong sentiment in one direction, by the end of that week, you'll be the other way. Yeah. So I'm expecting this account to make a loss. I'm expecting the other account to make a profit. But I'm running the experiment on both accounts just to see whether or not it's worth developing a strategy to go with sentiment as well. So the idea being with this particular strategy is, as you can see, we give the market plenty of breathing room. Yeah, if it's going to do this, that's fine. One of these days, we will get in, and have an opportunity to get out. If it pushes against us dramatically with a big news event, for example, like we've just seen there, we will take another trade and try and get out the following day. If we can't, eventually we will hit our stop losses. But the other account will have been trading in that direction and it will have benefited from those news events. Yeah. So the idea being is one account will continuously make money. The other account will try and get out of some of the trades, yeah, which makes it a positive return overall. It's a very, very simple strategy, but it's hedging. So we'll see what happens. But I've got the built, logics all set up. This is day one test. So we'll see how it goes. But this account is sitting in $13 of profit. This one is sitting in $119 of loss at the moment. So we'll see what it banks, basically, over a period of a week or two. But I'm 99% sure that the one that is trading against the sentiment, which is this account here, is the one that's going to make the money. But we'll see. That's not going anywhere, that yen. And it's not going back, but it's not going down. So we'll see what happens. IMF is concerned about medium-term fiscal trajectories. ECB's Lagarde. ECB will cut rates soon, barring any major surprises. Notes the bank is extremely attentive to oil. Geopolitics impact confidence. Nothing exciting. Lagarde's waffling on, but yeah, nothing we haven't already been told there. Monitoring oil prices closely. Observing deflationary process. Yeah. So it's all the same stuff, but ECB will cut rates soon. So we know we should be bearish euro. Yeah, so it sells on euro pairs. I'm still long euro US dollar, but if that intervention happens, I'll be out of this. I'm looking for the intervention basically to help me get out of this. Anyway, so yeah, we'll see what happens. But at the moment, that doesn't look like the intervention. That was a very big order, but it's not what we were looking for. So, but it's good sign. It's a bigger move than normal, isn't it? Cleared the decks of long positions, yeah. Lagarde just said you rates will cut soon. Yeah, go spend my pint. Yeah, I will go spend my pint. I've got a beer machine downstairs, although I have got a fitness class to go to at 5:30. So it's probably not a good idea to have a beer this afternoon, although I feel like having one because this thing's driving me mad. Anyway, so yeah, I'll be back tomorrow. But I just wanted to cover that sentiment EA because I'm going to look at that throughout the week and see how it's progressing. We'll obviously see if we can find an edge to trade against these retail guys. Right, I'll be back tomorrow afternoon. Tomorrow morning at 8 o'clock. We'll have a look at the pound, have a look at what's happened with the talking heads this evening, and the New Zealand dollar, etc., etc. All right, so have a good evening. Anything you need, I'll be in Telegram or Discord. Other than that, I will see you guys next time. Have a good one.